confidence has indeed dropped over the last few months. But let's remember that last year we reached a record high level in business confidence, and we have seen a gradual decline since then. Headwinds were already in place in early 2022 as a shortage of raw materials created inflationary pressures in supply chains, and staff shortages from COVID resulted in wage inflation. But there are probably three new factors coming into play that affect business confidence further. The first is the rapidly rising energy prices. Second is the looming cost of living crisis. And then also businesses expect input costs to remain high. All of these things point to a squeeze on profits, which affects the business confidence results that we've seen.
So, Rachel, based on your first comments there, it sounds like businesses are not very good predictors of demand. But does the survey tell us anything about the type of habits we can see when it comes to, say, M&A, CapEx, sort of expansion activities that businesses would normally conduct if they are actually feeling confident, not pessimistic?
Yeah, well, I think it's worth remembering that the world has been incredibly volatile over the last 12 months. And businesses can only predict what they can see in front of them. And nobody predicted some of the world events that we have seen very, very recently. But employment looks very, very strong, and that's one good indicator that we see growth. You mentioned earlier that the UK economy is still predicting a positive outlook of 28% positivity, and that's still within growth ranges. In terms of things like CapEx or R&D, we are seeing declines in the investment that businesses are expecting to put that way. But I think we will see winners as well in this market. There will be opportunities in terms of gaining market share, outsmarting your competitor, and further M&A activity.
Rachel, any indication on Brexit on this and whether it's made Britain more competitive on a global basis? I guess the pound falling, of course, as a net importer is a negative for inflation, but does make us more competitive on the world stage. And I noticed that great regions such as the West Midlands and Yorkshire and the Humber are saying things are in fine fettle.
Well, our research didn't specifically ask about Brexit, and that's not something I'm able to comment on. But as you've seen from our report, inflation remains the primary concern facing businesses right now across the regions. Now, in terms of the differences between South East, Yorkshire and West Midlands, yeah, we've absolutely seen the highest expectations for output and employment in the next 12 months from those areas. They do expect to see increases in wages, but believe that they can continue to pass those costs on.
The wage situation, I mean, is a minor improvement from 83% to 80% in companies expecting rise in staff wages. But this is a good thing, isn't it? Redistribution of wealth to staff rather than the C-suite?
So there is definitely positivity in strong employment predictions and strong wages. And the ability to democratise that across the regions within the UK. Positively, 21% of UK employers predicted a rise in employment, which is almost double that of the rest of Europe at about 12%, as firms continue to fill staffing gaps that appeared during the COVID-19 pandemic.